Welcome to the Business Finance Bulletin, episode 263. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, startup loan company hits new milestone in loans distributed, new government measures to tackle late payment, and businesses holding excess levels of working capital. Let's open this bulletin with some great news from the British Business Bank if you're a startup business in need of finance. Now, the British Business Bank is home to all of the government's finance-related schemes, and one of those schemes is the Startup Loans Company. Now, as the name suggests, it's there to provide loans to new start businesses. Now, the new milestone that has been reached is that since the loan company started lending money in 2012, they have just hit a total loans disbursed figure of £500 million. In terms of businesses helped, well, they've helped 63,920 businesses, and the average loan size for these startups is £7,832. So a good average size, a chunk of money if you're just starting out in business. So how does the scheme work? Well, the scheme can advance up to £25,000 per person or per director in a business, up to a total of 4 directors. So if there are 4 of you, you can get in total up to £100,000. The loans are repayable over 5 years. The interest rate is fixed at 6%, and standard criteria in terms of information needed: a business plan and a cash flow forecast, all demonstrating that you need the loan and that you can afford to pay it back. So if you are a startup in need of finance, just go along to their website, which is startuploans.co.uk, and there you'll find all information on how you can apply for that finance. Moving on now to our old friend late payment. Yeah, it seems that hardly an episode goes by without me sharing some new government proposals or initiative on tackling late payment. Well, there's a latest announcement from the Small Business Minister with what seems to be more tangible actions now coming out as to what they're proposing to do to keep cash flowing in the economy. First of all, there's the proposal that the Small Business Commissioner will now be given more teeth, more powers to tackle late payment amongst persistent offenders. These larger firms that are persistent late payers could now potentially face fines from the Small Business Commissioner. Also, that body is going to be given control of the prompt payment code. So far, that's a voluntary code that larger businesses have signed up to. That's now coming under the Small Business Commissioner's kind of remit. So expect more hard action from the Commissioner there. Also, company boards will now be expected to be more transparent and have more accountability on payment practices. Audit committees will be expected in the company's annual report to lay out the company's payment practices. Also, in order to kind of stimulate a use of technology, a new Business Basics Fund has been established. Up to £1 million will be available on a competition-led basis to come up with new technologies to improve invoicing, chasing payment and credit management. So there we are, a few things that the government is now wanting to do in order to ramp up this problem of late payment. The government has said that since 2015, the amount of money outstanding in late payments has halved. So they're saying that the problem's getting better. But to be honest with you, that's probably more to do with improving economic condition as opposed to previous attempts to tackle late payment. But hey, good to see more actions being taken. To a new survey from Lloyds Bank, businesses are sitting on excess working capital amounting to £593 billion. This annual survey, the Working Capital Index, has estimated that businesses in total are sitting on approximately £142 billion of working capital, which is made up of stock and debtors. Now, Lloyds have looked back at industry norms and historical data, and this is where they estimate that the excess working capital is about £593 billion. Now, why should you care? Well, it's working capital that keeps your business going on a day-to-day basis. The more cash you have tied up in stock and debtors, the less you have to keep your business going on a day-to-day basis, the less you have in order to grab opportunities as and when they arise. So the key thing here is to keep your working capital tight. Now, the Working Capital Index survey has estimated over the last year this excess has grown by £15 billion. And the main culprit, well, over the last 3 3 years, it's estimated that the amount of money invested in stock has grown by 33%. That's a lot of money to have just sat on your shelves. So the key message is tightly manage your stock, get rid of old slow-moving lines, and really tightly manage your debtor portfolio to make sure you're being paid on time. For another bulletin, as ever, I hope you enjoyed watching, and if you did, please don't forget to give it a like and a share. So that's it. Look forward to being with you again next time. In the meantime, have a great, successful and profitable week.